am back. Um, Sorry, I'm terrible at introduction over here. I hate introducing myself. It's okay. It's life, you work with what you got. So let me hold on. There we go. Let me pop the chat up just in case anyone want to chime in. Um, quite a few minutes here. Give me 1 second. Here we go. There we go. All right. We are up and running. Okay. So, I haven't been on live for quite a bit. So, I know it's kind of like 9 o'clock already. So, I'm sure people are sleeping uh, very soundly. If you have GameStop in your portfolio, you shouldn't be up at night and, looking at price point or anything like that. Unlike me, right? Of course. No, just kidding. All right, so in a good mood, obviously. The price has been kind of doing a little bit of dancing over here. But today we are printing a what it's called doji. I would call that a doji candle, meaning that it spends most of its time doing its doji thing. You know. Um, hey, what's up? What's up? It's midnight here. Oh no! Go back to sleep, Carter. You worked too hard in your live stream, which I saw, so that was good. So go back to sleep. Don't worry about it. You could watch it later, okay? Don't worry. But yeah, I appreciate you. But anyway, so my what I saw price today was doing, what it needs to do. Yeah, I'm sure there's a consolidation point, but I feel like the strength of the trading day was pretty strong. It wants to go up, but I think again because it's short week and all that stuff, they don't want it to run yet. So I think next week we're gonna see some firework here. Um, Perhaps we already have a confirmation that we're gonna do a earnings report without calls, which is consistent with what Ryan Cohen and leadership has been doing so far. There's no need to have earnings call, and I'm sure they're gonna, come up with a negative connotation to that. It's like, oh, see, he doesn't even care enough about a shareholder to give a call or anything like that, which is bullshit, right? In my opinion, he needs more time to do his CEO stuff. So why does he waste time reporting on the report that anyone could go and read for themselves, right? And numbers doesn't lie. So go and look at the number. If you don't like the number, then don't invest in it. It's simple, very simple, you know. So that's why, again, I like the style of leadership in this way because there's no embellishing going on. There's no overhyping on the number. And so if the number doesn't speak for themselves, you know, then there's no amount of wordings that would, entice anyone. I mean, there might be some investor like Wall Street types. They would, feel better if Ryan Cohen were to speak to them. But to me, that's weak, right? I'm sorry to kind of offend anyone from Wall Street type. I know you have more money than I could ever imagine. But anyway, enough talking smack. So let me go through this real quick because what I've seen, of course, like I'm sure if you invest in this company, you've seen this chart a million times. But what I like to do is to go back in time. Okay? So let's go back in time. I think a weekly would show a little bit better right here. I mean, the perspective that I have is always to look in the past uh, price action. just to see, okay, what level is it going to stay at? Most likely, right? Again, it's all probability here. You're never gonna get the right price action, and buy and sell at the low and set a high and whatever. There's a lot of like technical analysis people who would love to tell you that they could predict the right price point to get in, which is bullcrap. Yes, there are times when you could predict it right, but you're gonna get it wrong most of the time before you get that right. So, but that's why TA and all that stuff, I kind of take it with a grain of salt. So, but yes, there are levels in which it makes sense to go heavily in if you want to, do whatever you need to do. If you want to bet it down, up, or whatever, that's your prerogative. But for me, I feel like this company is much better, much more aligned with the bull thesis here. Okay, at the current junction. But anyway, so this is the price point that I was looking at. It seems like this $29 level right here is respected. It used to be a support for a long extended period of time here, until it break through. So how long does it spend in here? Almost a year. Okay, from January to March. Okay, so close to a year, up above 29, and then it breaks down, and then it's kind of like trying to get above 29, coming right back. This level is pretty important. You see a lot of interaction in that level right there. So this flip to support. Uh, like a simple TA here. I know. You know, I'm doing the TA people disservice over here. No, okay. Enough playing. Enough playing. My point here is, I think it's going up. Okay, everybody knows that. Now, price point usually doesn't really matter that much to me, because I know that the company is doing better. So I usually try to eliminate some of my stress just buying consistently over time. But there are times when uh, I can't help but, psychologically, again, this is just me psychologically speaking to myself here. And I know myself to be very antsy, and I want to kind of beat the market in a sense, right? And I understand the trader mentality pretty well because I used to be one of them. Okay. And what I've learned is that the long term shareholder or anything, any security at all, whether it's XRP or whatever, Bitcoin, uh, whatever, security that you get it just your hand into, most likely if you are consistently at buying in at every level, you are more likely over time, again, over time, you're more likely to do much better than if you're trading in and out. Okay. You might get lucky. You might get lucky. And the thing is, like, I don't blame them to, if they wanted to kind of, see if they could time the market, right? That's their own risk. In my opinion, if you want to buy and sell this company, go right ahead. To me, okay, if you want to sell to me right now at this current price, great. More share for me, right? More share for people who are actually believing in this company for the long haul and stay put in it. Um, because I think that the ebbs and flow of the market is decided by the market maker already. So, uh, to me, the price has already been determined. Now, I mean, anyone's job here is to uh, determine whether, uh, how I put, how should I put this? I feel like the job of the market maker is to provide you that liquidity, right? That liquidity where they they tout it as like the most important thing. So if there's no liquidity for people to sell, I mean, if there's no sellers, right, for this particular stock, you would not get the liquidity for them to push the price higher. I know it doesn't make any sense, right? My point is like, the price discovery comes from people buying and selling this thing. So if there's no one willing to sell, then there's no price discovery. So technically, market maker could could theoretically push the price lower and lower and lower, searching for people who are selling. Now, there are other mechanism as well that I want to kind of talk about this a little bit more in depth, and I could show that through and interact with a clip, a video clip of Ken Griffin describing, a certain a thing here, and um, I think he's describing his kind of a company, the security versus the hedge fund. Now, it's only 5 minutes long, so I'm gonna kind of stop and then interact with this a little bit here because I think it's important to listen to it. And there's a few points here that I wanted to kind of draw what I think is happening right now as we speak to GameStop as well as Nvidia of all stocks, right? Why certain other YouTuber that I've mentioned it that particular YouTube video before, but you see it. But let's listen to this one first, and then we'll go from there.
Fund, which is extremely successful. Why did you want to build another business, Citadel Securities? Why did you want to do that and run the risk that you wouldn't be as successful in that business as you were in Citadel Hedge Fund?
So, David, I think it's first important to recognize that the hedge fund is comprised of a number of different investment strategies that have been built over now 30 some years. And there's a number of strategies that don't exist today that used to exist where we didn't succeed. So we've always been in the business of building businesses, of building something new. For Citadel Securities, we saw this intersection of the advancement of predictive analytics and the rise of the electronification of markets. We were moving from a world where you would call a broker, who would call for a broker, who would walk to a specialist pit who would do a trade, to an electronic world of straight through processing trading. In other words, type an order on a computer, boom, it's executed in fractions of a second. And we felt in that world, our deep heritage in software engineering and in predictive analytics would let us to be a market maker of the future. And one of my partners who recently retired, James Ye, led that charge for years in the origin story of Citadel Securities. And we became one of the largest market makers in U.S. options and U.S. equities. And then under Peng Chao.
So this is important. See, he mentioned a couple of things, right? Algorithm based. Okay, we all know that sometimes certain price order doesn't get through because it's rerouted to a different location, and on top of that, these type of analytic base and all that stuff, it's just a lingo for like algorithm, in my opinion. Again, I might be wrong. But he's talking about trading in a fraction of a second, okay? And so those algorithms will fake people out, will front run you, will do everything that they can in order to get you to either sell at the wrong time or buy at the wrong time. Okay, both ways. And also too, since they also have the data for option and equity, they could use option against you as well. Now, yes, I'm not saying that you cannot win spectacularly, using option, because we know that Rowan Kitty could do that. But you need to time it right. And who's better to know about that? Regular people like you and I won't get to know that unless you're, kind of following it like a hog and thinking that you're actually predicting those things. which I don't knock. Okay, if you have that ability, gift of predicting the right movement and all that stuff, great on you. I'm not. Then do option, do those things that you want to do, but just keep in mind that the option pricing, okay, is pricing by market maker. Don't they are the one who gave you those price, and so when they give you those option price on the volatility and all that stuff, they already take into account the risk they are willing to take for that particular time period. Okay, so if it's a yearly basis, monthly basis, or weekly basis, the risk is according to that. Not saying that the algorithm cannot be broken, though, because I think what happened in the January, the sneeze or whatever they call it, this time period right here, was the algorithm breaking. Because I think what they didn't realize is that, those algorithms probably being left alone, just automatically shorting this thing, right? Because they don't think that retail would actually holding on to this. Again, speculation. You could call it a speculation or whatever. This is what keep me up at night. And so when those algorithms keep shorting this thing, thinking that it's going to go bankrupt, anytime there's some new catalyst, doesn't matter. And this is when Ryan Cohen bought in, okay? RC bought in. So that algorithm could be spooked because of, this new catalyst that is being added to the stock. And so, and on top of that, yes, retail was heavily kind of buying in as we go. But the algorithm also was buying it up as well. I'm sure, to try to profit it from the upside. On the run, momentum trader, volatility trader, option traders, and I'm sure the quant, those specific thing that he was saying about how trading a fraction of a second, those things also push up the price as well. And so I'm sure, some of that is being broken by the fact that people are buying and holding this, right? And again, this is that the term diamond hands coming to this particular stock is because of that particular thing. That, that if you buy enough shares and hold it for a long period of time, algorithm cannot account for that, because algorithm only works when you are buying and selling this thing. Okay, now this is the past. I don't know if it's still true today. I'm willing to say that. I mean, I could speculate that it's still not close yet. I mean, I would. I'm willing to say that it's just a speculation. Okay, to say like a strong speculation at that, because again, I don't have the evidence to show that the short has not closed. However, if you kind of follow this company for a long time, you see a lot of hits and bits and pieces, in the market, no, no, in the media, telling you a certain way about the stuff, and it seems like skewed to the downside for some reason, calling people names, all of it. And this is why I'm so curious about whether it's true. And I'm willing to wait it out for a long time. Again, I'm long on this company for a reason that people are telling me that I'm not wrong because of that reason. And for those of you who watch me for a long time, you would know, you understand why we're in this company, and we're not in this company because of Roy Kitty, so to speak. because I bought the company with the thought that Ron Kitty might be gone by then. Okay, but yeah, I'm happy that he's still here, and we're still waiting on him to do some YOLO update. So if he's still here, I mean, if he's gone, if he already sold his position, okay, I mean, no harm, no foul. He already make his money. So you know, if he doesn't sell, if he doesn't sell his share to us, how would we be able to, buy it at this price level right here? But anyway, hedge fund and market maker, right? And to me, that's a conflict of interest, to say the least. Hi, Manuel. Thank you for joining. Haven't seen you in a while. What's happening? Are you long, short, still, or waiting on the sideline? For Ron Kitty to come back, or what? Anyway, so if you want to share, that's fine. If not, that's fine. Hope you enjoyed the show so far. I don't know why I'm so like flustering today. Um, like stumbling over my words here and there. But okay, that was a long-winded explanation of how I feel about those algorithms. And okay, let's continue with the video.
Powell's leadership over roughly the last 7 or 8 years, we've really grown to be a global player. Pung's done an incredible job of building a team of incredibly gifted people with software engineering skills, hardware engineering skills, work in machine learning and AI to allow us to manage 25% of the U.S. equity flow every day. And it's an incredible testament to him and his team that they've built so much capability under one roof to be such an important provider of liquidity to retail and institutional investors.
Now, Citadel, the hedge fund, is a fund I assume you own. You're the principal owner, if not the sole owner of it. And Citadel Securities, you were the principal owner, if not the sole owner of it. But recently, you took some outside capital, which I think is the first time you've taken major outside capital. Is that right?
So I'll just fill in a few blanks there.
Okay.
So I and roughly 50 people own both Citadel Securities and the hedge fund. What makes us different from many partnerships is that virtually the entire firm is owned by people who are here today. So our retired partners over the years, we've bought their interest back to keep the firm owned by those who are active and engaged in the business today. Now, for us, the opportunity to work with Sequoia and to have Sequoia as an anchor investor in Citadel Securities was an incredibly compelling proposition. As you and I both know, Sequoia has backed some of the great success stories in American technology, whether it be Apple or NVIDIA or Google. And to have their expertise and wisdom in helping us think about positioning Citadel Securities for the next decade or 2 decades or 3 decades has been a really powerful opportunity for us that we availed ourselves in having them as an investor in the firm.
All right,
Okay, so did you hear about NVIDIA and Apple? So let's go back a little bit here. This is important, okay? I feel like it's important. So let's listen.
Sequoia as an anchor investor in Citadel Securities was an incredibly compelling proposition. As you and I both know, Sequoia has backed some of the great success stories in American technology, whether it be Apple or NVIDIA or Google. And to have their expertise and wisdom in helping us think about positioning Citadel Securities for the next decade or 2 decades or 3 decades has been a really powerful opportunity for us that we availed ourselves in having them as an investor in the firm.
So Sequoia investing in Apple and NVIDIA? So this is the reason why I think NVIDIA just shot up through the sky. For no apparent reason whatsoever, right? And everything, again, I mean, you could argue, okay, they post great earnings and all that stuff, but despite all of the round tripping, that's happening, Moran's explained it extensively. At some point, those type of revenue is going to be coming to light. That it might not be a revenue that warrants a $3 trillion company here. And so my thought is, I think, Citadel or whoever, again, he has like, over here, he said like 20% of the order flow coming to him. But this was like 2 years ago. So I don't know how many now that he has. I'm sure he's probably captured more of the market in retail, both retail and institution, as he was saying. And so it's not far-fetched to think, for me anyway, to draw a conclusion. I know it's a speculation or whatever, I have no evidence. But to say that the price of Nvidia was kind of suspicious to me, right? There's no suppression in price. They just let it rip, so to speak. So that's the terminology that I would like to kind of put in your mind. Huh? I don't know. I don't know. To me, it doesn't seem far fetched that they would promote their own, uh, investor, and perhaps again to try to get those technology going and all that stuff. I'm not saying Nvidia is a terrible company on its own, but is it worth $3 trillion right now? I don't think so. In my opinion, it's overvalued, right? Now, Nvidia, where is it? All right. I don't even spell Nvidia. Come on. I'm having fun, you guys. I am sorry about that. But anyway, I was trying to chart this thing. Look at me. Look. What is this nonsense? Oh my goodness. But anyway, so I've been kind of like following this, and I did not add to my short position. Now, when I said I'm shorting, I'm usually buying an inverse ETF. Okay, so I'm not playing puts or anything like that. So I was just, looking at this. I was like, hey, this is the easiest short in the world, in my opinion. That's just my opinion here. Sometime I got it wrong. I was shorting this over here too, you know, but I didn't take profit on that inverse ETF, and then it just ripped against me. So I got a little scared, so I kind of closed at a loss. But hey, that's just me playing with a couple hundred here. Uh, but anyway, so my point is that Nvidia has been rising. You see this? Like, it makes no sense to me, right? And this is billions and trillions of dollars being traded, I'm sure, within this, past what, a year, right? What is this? This is a weekly chart here. Let me see. What am I trying to look in here? So let's just say from January of this year to now, how far has it come? Look at that. 200%. 200%. Right? Now you could say, oh, but look, they beat earnings every time. Okay. Okay. How many percentage of beats? Okay, 8% in share, per, what is it? Earnings per share, okay. 8%, 18%, 29%, 28, 18%, okay? In the teens, okay? In the teens, okay? A lot. Okay. Now let's go back to GameStop. I know it's a small company. I get it. It's crazy for people to compare GameStop to Nvidia. But I'm gonna be crazy today. Let's be crazy together. Look at this. So when GameStop beats earnings, it's to the tune of hundreds of percent. Okay, hundreds. Okay. Oh, I mean, look, Oh, look at them, 6%. But it's still good. I'm telling you. um, look, 78. Okay, that's good. That's good. So, you see, triple digit for a couple of times. Let's see. This one is down. Oh, that's so sad. And then down again. Oh, that's sad again, right? But anytime they are down, what are they doing? They're improving from, you know, not really much. But here's the thing. Have you ever thought about this particular earnings though? Even though they're down 25%, I'm not knocking that, but 25%, they still make money. This particular earning, they're actually coming out, positive. It's just not to the expectation of Wall Street, right? Wall Street just over expecting. I feel like they raised the bar way too high for GameStop to hit. But even then, we are able to do it to the tune of, making earnings per share. What reported 22, but they were expecting us to make 30 cents per share. Okay. So it's worth noted that they actually are earning here. So I would scratch that, miss EPA miss, so to speak. But anyway, and then subsequently they were reporting 30% down on earnings. So sometimes you make good business, sometimes you don't. But then we make this comeback. Okay, so ebbs and flow of the market in terms of business. Business have that at the help. Sorry, I'm just speaking nonsense here. Who is this? Hi Tony. Why didn't you ride that to the upside? What the fuck? What do you mean? I don't know what you're talking about. Are you talking about the NVIDIA? Yeah, be specific, please, Tony. I don't know who you are. But thank you for joining. Thank you for the question, but please be specific. Because I'm jumping all around like a crazy person here. But anyway, so my point here is that the company is doing much better, improving time and time again. But for some reason, the price improvement is not there, And, if you kind of like look at it at the base, okay, you don't look at under the hood on the surface, you would say that people are selling this thing, okay? Now, my thought about that is that, okay, if there's a selling pressure, you would see these candles here, right? And I was thinking, okay, so why am I not seeing this steep of a selling pressure on here? There's no volume, no volume. Like, that's to me screaming manipulation, okay? Because market maker, no? That's just my thought. Again, observation, you could call it at that. But again, I don't have evidence for that. I just see this and just baffled. Because this I feel like there's some real selling pressure here. Because okay, at least you get that candle, right? Red candle, red candle, red candle. Sure, I'm sure some of this was because people are actually selling and take profit. I'm not knocking that, sure. But this is not. This seems suspicious to me. Okay, so now, I think that's all for this one here.
Sequoia usually, it's a great venture firm for sure, but usually at some point they like to take public or liquefy their investments. So should anybody think that at some point Citadel Securities might go public?
I think that's a reasonable assumption. And one of the ingredients that Sequoia brings to the table is helping my management team really understand, as a public company, what will be different than how we run our business today as a private company? And those different.
So Sequoia like a hedge fund, right? Yeah. So I'm sure that's a reason why they pump Nvidia and pump Apple, you know. And again, seemingly a collusion is happening right here. Seemingly. Okay. Allegedly. My speculation. Again, from a crazy person, okay? Just thinking about this. I'm like, okay, so you have Sequoia investing in your company now that is a market maker and also a hedge fund. And then all of a sudden you have two investment that is very important to a certain entity that just invest in your company. You know? And now both of them are the top two company in the world. It's questionable, right? But anyway, I'm just a crazy person here.
Differences, as you and I both know, some will be positive, some will be negative. But we need to understand those differences and embrace those differences if we're going to go public down the road.
Now, the other partner that you sold a stake to was Paradigm, which is a cryptocurrency-related investor.
There you go.
You haven't been trading, I think, or making markets in crypto. Do you expect to do that in the future?
So crypto has been one of the great stories in finance over the course of roughly the last 15 years.
And then he's admitting that he's wrong about crypto and all that stuff. Now, my point is that, this is why crypto is being pumped and all that stuff, which is fine. Look, hey, I have some crypto too. I'm grateful for that. I greatly appreciate that. But the point is that, they usually mislead you into, other investment, or you should be investing in other stuff, right? And so, again, this is why the effort of a lot of people, and through no fault of their own, I'm sure, because they are short bias themselves as well. Look, I'm long bias in GME, so there's no secret about that. I'm not, kind of secretly shorting this thing at all. I don't short this thing because I see the potential to get blown in my face. Because if you don't short at the right time, you're not going to get anything. And the only way I could short this thing is to buy put. As you saw just now in that video, who make the price of the put? Who set the price of the put? Market maker. You think you're going to benefit from that put? Nah, not probably a little bit, but not by much, unless you buy a long put and all, like, long dated put. Sure. But that's also have a risk on their own. So my point is that you gotta time it right, and so buying shares is usually the in my opinion, okay, is the safest thing to do, and then you do it over time consistently. You're gonna bound to win, because of the fundamental of the company is doing much better, right? Now you could argue that the trading card is such a terrible idea. But that's remained to be seen. You can't just say that without looking at the number and then just spewing it out. It's a terrible idea. Okay. All right. Can we just wait and see? And in the same way, I'm guilty of this too. That, just because Jimmy do it doesn't mean that's going to be the greatest thing either. But to me, it shows that the leadership is doing it to increase the profit margin, increase the revenue, increase the amount of people going into the store and shop, and be happy to do so. So to have a CEO and leadership that's willing to do that, that's pretty good. Doc Breezy, I'm sorry if I butchered your name. No, I don't have any thought on Palantir. I mean, I thought of buying it, but I just never make that choice. So I'm happy if you're in it. I saw it at like what, $60. Just my opinion. I think it's overblown already. It's in the S&P 500, and so I missed it. I saw it at $12 at one point, and it was like, oh, it's too high for me. So that could be. I mean, it could go double from here, for all I know. But I don't care about it too much because I'm not invested in it. But if you're in it, congratulations. If you think about jumping in it, please do more research on that. So, yeah. Reason why I focus on this is because it hasn't been announced coming for GME. I'm waiting for it to get to the S&P 500. I'm waiting for it to be a lot better than it is today, right? But I'm glad that I was able to spot it before anyone, at $10, at $20. But I also bought it over here. So again, dollar cost averaging down. Currently, I'm happy to say that I'm green because of all that years of accumulating and trying to do some trading too. Yes, I'm guilty of that too. I fully admit. But every single time, I'm terrible at doing it because yes, sometimes I could increase my holding, but most of the time I'm wrong. And so I found that over the extended period of time, I get less share. Had I stay in, I would have had more shares. And so I've learned to kind of trim that trading account. I still have some trading account on GME that okay. Let me try a little bit harder, And this is why learning to do TA and all that stuff. Just to know enough to be dangerous, so to speak, or to know enough so that I'm not, just believing in anybody who's telling me what to do here in terms of TA here. So that's why. But again, I know myself very well. I used to be a trader myself, so all that. And I just think it's so stressful sometimes. But to me, the reason why I have my trading account still is because I don't want to be bored either, right? It's boring for people to be just buying and holding, buying and holding. So if I don't have my trading account, I would be so bored, and not interested in looking into the stock and leadership and all that stuff. So again, I'm doing my strategy for a reason, and I'm wishing that everybody has the same. Not same strategy, have their own strategy. Whatever you feel works best for you, do that. And I get a kick at looking at other people's video. Now this gentleman here, I've been watching him, describing GameStop, doing TAs. Now, this gentleman here, he is short bias, and oftentimes, anytime I talk, listen to him talk on this video, it's always like, oh, this idiot, and there's no reason to believe that, like he was saying it over here. It's like, oh, I don't see any way that this stock would ever go back to, this prior high level and all that stuff, right? Very short bias, and you know, to me, okay, if you bias towards that, I could also bias towards the upside as well. And obviously, this person doesn't believe in the trading card to be anything but a gimmick, a gimmicky thing, And that's why I was saying, like, why so negative without even looking at the number yet? And he's looking for the opportunity to short it at every opportunity. So last time I watched his video, he was shorting 29.80. I don't know if he closed his position or not, but this is what the short sellers are. They have to do is that they have to manage their position as well. Okay, meaning that if the stock moves against them, they have to close out their position. Or if you buy your put's gonna be out. You're not gonna be able to profit off of that at all. That's why I picked the inverse ETF if I want to short anything. I don't know, right or wrong. I just feel like it's a little bit safer. Huh? because it doesn't expire. But yeah, it has its own risk as well. So that's why I don't do too much of based on my portfolio size. I don't do much shorting at all. I mean, learning to do those just for my own education, right? So that when people are telling me, "Oh, I short this thing and make a gazillions of dollars," I'd be like, "Okay, what did you do? Tell me exactly what you do." um, and so, but anyway, uh, that's just my thought here. Of course, this TA here, he was begrudgingly saying that, "Oh, I don't want to tell you anything bullish about this company because I don't want people to come back and comment on his video saying, "Oh, how is your foot doing?" and all that stuff." But very condescending too. Sometimes it was like, "Oh, I have so much money, more money than you could ever dream of. I have a FU money." It's like, it's like, okay, if you have FU money, why are you selling your trading idea over here? Okay, great on you, great on you. But yeah, even the bear of the bear over here. Um, the reason why I show you this one is just to showcase to you, even though the bear of the bear seem to think that this stock will go up in price. Of course, anything could happen. It could turn back down on the dime here. So just be careful. If you buy calls and all that stuff. Full disclosure, I don't have any more calls. Okay. No, no, no. Actually, no. I don't have buy call side, but I have some sell call side. Okay. I know. Terrible. But I don't think by this Friday it's gonna reach 40. So I'm like, okay, let me just sell some at 40. Hopefully, in 2 days it's not gonna do that. Thanksgiving and all, I'm sure it's gonna be a very slow day. So that's a risk I'm willing to take. Um, for now, no, I'm not saying I'm not selling the whole thing, just a couple contract here. So calm down, people. Okay. But like I was saying, the ebbs and flow of the market has already been determined by the market maker out there. So if Citadel over here has 25 and Virtue whatever the other guy another 10, that's like the market already. And so if they want to send the price up, they're gonna do it anyway, and they do that based on the call puts ratio, and they do that to make the maximum amount of money that they can for that particular day or week, whether to short or to long or whatever, to cover their position, short position at a loss. They will do it in order to protect their asset. I'm gonna end on this thing because I think if you want to win, you have to think of it as a long term. I don't know how long it's gonna take for us to know the true short position here. But I'm willing to wait it out. At least until the company doing the things that I was kind of theorized that they could do, and that is to get to the S&P 500, and that is to earn at least $3 to $4 million per year, paying dividends eventually, and to trade based on its fair value, which is I think 5 times its book value is reasonable. Why is it reasonable? Because it's Best Buy. That's what Best Buy is trading at. Most retails about 4 to 5 or even 6 times. I'm sure you could find those on most of the website that tells you the value of the company. Okay. I will end at that. I know, I'm here for the long term success of this company. And I'm also here for the short-term gain as well. If tomorrow Jimmy rocket up to $1,000, okay, I'll sell real quick. No harm, no foul. No harm, no foul. But yeah, you gotta be a bit realistic. I think realistic price point would be all-time high. Within a year or two. How about that? I think that's pretty realistic for me to think about. Again, organic growth here. Okay. If Ryan Cohen were to dilute again, yes, more money for shareholders, more money for equities, but traders gonna be pulling their hair out. Gonna be like, this stock is a shitty stock and all that stuff, right? So just be on lookout for that. If you're paying option and all that stuff, understand that's the risk. And don't go crying if Ryan Cohen's gonna dilute this round as well. So, but yeah, thank you so much. I appreciate, Carter, you're still here. I told you to go to bed. No, I appreciate you. Okay,